Afternoon traders, this is Christian Farmer. It's Tropic Trade Group, and this is your end of day market recap for what is today? Today's the 19th, Wednesday the 19th. What a roller coaster day that we had on our hands. We have Nvidia out, and a lot of moves happening there's a lot of pin action that's happening. Nvidia itself is not up that much. It did put in a really good quarter. As I expected, it is up now 4%. So it's been increasing. It started up about 2%, and it's been gaining some traction. I will bring up that chart in just a second, but it is such a proxy for risk on, risk off. You could see some of these moves in the after hours. You got CIFR and IRN, a couple of stocks that have not been acting well, as well as APLD. All three of those stocks are up at least 7% right now. CoreWeave, another one that's been taken to the woodshed, is up 6.7%. NBIS, Wolf. So again, like it's all the AI trade. VRT's up 5.5%. Rambus, BE's up to 114. That's a very interesting level for BE, which I will bring up shortly. SanDisk is up. So here's Nvidia up 4%. It is in the mix here. These are just large companies. Let me just move this so that you can see this a little bit better. Right, you probably still can't see that well on the screen, but there you go. And let me just max up. Let me put small companies in here too to see what's going on. Oddity had a good earnings reaction. They're up 21%. There's IREN out of this group up 8%. NVTS is also doing well. CRDO is up north of 150. So I said this just before the bell. I said, I said I don't think Nvidia is going to move that much. I think the implied move was 7.2%. I think it's more for these companies, right? The other some of these names are going to move more, and sure enough, I mean, so half these names I see there's 25 names that are up over 5%, and not all of them are tied to that. I mentioned Oddity, which is up 21%. So there you go. Let's get to just the price action for the day, and so let me flip the screen. Hope everybody had a nice day today. So here we are. Here was the price action for the day. So we had the Qs outperform today, up 0.6 of a percentage point. Just like I said, a roller coaster day with the price action going straight up in the first half hour, 45 minutes, then straight down for the for the next couple of hours. And there's a lot of traps right now in this market. The semis did outperform for the day; they were up 1.8%, and it did have a little bit more of a risk on feel, even though Bitcoin was down 3.7% for the day. With uranium stocks up 3.2%. A couple different announcements in that space, helping that group, the CEG, the OCLO. There might have been one other company too. Silver was up 1.7%. Leisure stocks were underperforming, as well as I mentioned the crypto stocks. Solar was also down a bit, 1.2%. So again, maybe a partial risk on type day. Let's dig into the price action. So let me bring up, first of all, I've got the chart up here. All right, so there you go, Nvidia. So I mean, yes, it's nice to see right now up about 3.8%. But it, I laugh at some of these things because I don't know. It's kind of like curb your enthusiasm. I'm looking at, this is a 1 hour chart, and we're basically just getting back to the top of the value area for the week, and essentially like where we were last week. So it's nice to see this. It's nice to see it bounce back. This is not a bad spot. So we're trading right up to here on the daily chart. All right. So that's Nvidia, and that's the one that's getting all the attention today. Reminder that you're going to have a lot of data for tomorrow too. I was looking to see what I was pricing out the options for tomorrow in the Qs or NDX, and the options were implying about a 1.8% move. That's really hot. That was really a big implied move. And again, I think that because it covers not only Nvidia, but it also covers all the economics that we're going to get tomorrow. So that's let me go to the Qs, and I'm just going to bring up the 5 minute chart here for the Qs. Again, some of this stuff, it kind of like you have to like shake your head a little bit, because this is where we were at like 10:15, 10:30 in the morning, and then just completely U-turn. And we took out the lows, we hung in there, we didn't break down, and now we're back to the highs of the day in the Qs. um so so what is this, the takeaways from this? This is really for me anyway, because I do better with a nice smooth trending market. Like if I had my wish list of types of markets that I like to trade, it's basically you know just a very trending market where there's shallow dips, or dips into like the 20-day moving average, and then we rally. Just very neat and nice tidy trending markets. This type of stuff, it's more difficult for me. Some traders who are very good at scalping love these markets, right? Because you could make a little bit of money here, right? And then sell it. And then, hey, you could fade it and go the other way. And so some traders really like that. They like picking up, like hitting base hits, base hit, base hit, base hit. Then you buy the lows, right? And then you can kind of peel off. I am not that type of a trader. While I like to day trade a little bit here and there, but I am more just neat, nice trending, trending type markets. And yeah, I mean, a little bit of a lower volatility market. And I think it's important to kind of understand what kind of market that we're in right now. So here's where we are. We For the second day in a row, even on the low of the day, we came in and checked back to that bottom of the value area, and we're holding it. Right? Notice the rejection here. And I think you could also, like, by going through the different time frames, you can kind of just see the trend a little bit better. So for instance, on this daily chart, what do I see? I see that we're holding support, but I also see that we're getting rejected when we're trying to turn. We're just not ready for that turn yet. Maybe that will come in the after hours market. I'm not sure yet. But you could see as well, this was right around like the changing of the trend for the day. And here was your rejection, right? We come back down. And again, this is the same level that you just saw on the previous chart, right? That's the 596.21. It's the bottom of the value area for the month. So you could kind of see how we're holding in here, and trying to build off of that. But it's also tricky because we're not just going straight up, we're going back and forth, and we're trying to basically, what I refer to as, carve out a bottom here. And that takes a little bit of time and a little bit of frustration. I got stopped out of a trade, just horrible today. Horrible entry. I don't want to say horrible entry, but horrible exit for the day. So if you're struggling a little bit with this market, I second that. Trying to trade where, if you don't pick the spots correctly, you're getting hammered. Hence, if you bought something over here, right, you know we return to the lows, right? The market is not bailing you out of any mistakes that you make in this market. Sorry, I did not go. I usually bring up SPY first. I did not do that. Here's SPY, similar to the Qs. We are holding in, right? We're holding support. So even though the breath has been pretty nasty, um, here's, for example, something that I show in my midday note, the number of new 4-week highs versus lows. I like to see more new highs. It tells me that the market is being accumulated. We're still seeing, and at this point, what we want to see is the new lows contract. Right, the new lows have been expanding. This is New York Stock Exchange. And if you look at the NASDAQ, which is even more dramatic, I was showing this earlier today, but for instance, there's in the NASDAQ today 566 new 4-week lows today. Or I'll bring this screen up so that you could see it. Right, 566 new 4-week lows today, only 131 new highs today. And you could see how this looks if you look at the bottom. Again, this is NASDAQ. This is not New York Stock Exchange, or this is not SPX. This is Nasdaq. But you could see what's going on here, right? You got a massive increase in the new lows. So let's kind of start with what are we looking for. I've been pretty negative the last couple days. I don't like to be negative. I think really, if you're going to be an investor in this market, you have to be somewhat optimistic, at least long term, right? It's very tough to trade, like to be an investor in the market, if you're not at the end of the day somewhat optimistic about things. When you get but sometimes I do get negative in the short term when I'm seeing things that have acted like they have over the last couple weeks, which have just been pretty bad. Right? We've gotten a lot of warning signals. Right? We've gotten, even though I'm not a big fan of like the Hindenburg omen, right? I listen to people who talk about it because it's not something that I usually talk about. And these people were right, and especially not just the one Hindenburg Oben signal, but when you see like four or five of them, like when they're clustered together. So we got plenty of negative signs and plenty of reasons to be negative. So what would I be looking for going forward to say, because at the end of the day, like I do believe that this is just kind of a break in the action. I think it's an overall good reset, especially those riskier type assets. I've talked a lot about what the ARC Innovation and the IBD 50 ETF have been doing. Both of those ETFs are now down 16% for the month of November, very close to what Bitcoin is doing, down 18 and a half at this point for the month, which there's not even, we're not even near completing the month yet. Um, so this is a big reset. And again, I think part of that has to do with the Fed and what they did on 1029. So let's fast forward here to where we are now. What am I looking for at this point? Well, I don't want to see these fades that we're seeing. Now, again, we're marching here after hours, but what I'm referring to is these types of candles where we try to go higher and you can't turn. We're not turning, right? We're failing. So here was the failure on what, Monday, or is this Wednesday? The failure, we could not get back above the value area, and then we slipped down. So yes, good that we're holding support, but we haven't been able to turn the corner yet. So at the very least, getting back above the 5-day moving average and getting back above the 50-day moving average, right? So that's important. Number two, we want to see good participation, right? We want to see more stocks going up versus going down, right? So we need to see that equation begin to change. I think also, some of the trends that I've been pointing out recently, and I'll bring a couple of those trends up. Let me get the right trend up first. All right, let me move my screen. All right, so I've talked about this. This is consumer staples versus consumer discretionary, and lately it's been consumer staples that are outperforming consumer discretionary. So this has to change, right? We don't want to see this start to really ramp up like we did in the beginning of January, at the end of January, February, March, and April, right? That's not a good sign. If it stops here, that would be good. Notice that this kind of came in a little bit. Another one that I've talked about too is SPLV, which is low volatility equities versus high beta. Notice kind of the same thing, that it started to move up, like it did in February, but it's not nearly as dramatic so far. Right. So far there has been risk off over the last couple weeks. Risk assets like IBD 50 and the ARC Innovation have gotten really smacked over the last over the last couple weeks. But the one thing that's nice about that is it kind of resets all those really high um, speculative assets, and maybe that could put things on a better footing. I am concerned. Again, I'm still going to have concerns here. I would like to see, like, that's not a bad hammer bar for Costco. I don't like this. right? Costco, which I think is one of the best retailers out there. Yes, I know it's an expensive stock. It's funny. Let me tell you a quick story. Every time, I'd say over the last, probably since I've been on Twitter, anytime that I tweet out Costco, it doesn't matter if I'm talking about it bearishly or bullishly, there's will be somebody that will tell me how expensive it is. I get it. And you have to also understand that Costco is going to trade at a premium to other retailers. It's just a better run company, right? There's reasons why things are legitimately more expensive than others, right? It's a better company, right? There's better management, right? They do a ton of things better than every other retailer. So they're never going to trade at the same at the same price to equity multiple as Walmart or Kohl's, or any of them, right? So you could stay away from it because, okay, maybe it's just too damn expensive. I get that. But saying the same thing over 10 years and thinking that it's going to change the stock that has been notoriously expensive is not how it works, guys. I'm sorry, right? You pay premium for really good things. And that's why this name will always trade unless they change some big management process to make it that they aren't the best in the business, but that's why they trade at a premium. That said, they are rolling over. They're below the 200-day moving average. So this has to change a bit. All right, let's talk about some good things that happened in the market today. Because again, I really think that the consumer is starting to feel it more and more. We've seen it with the earnings reports as well. Light had a big day. The stock was up another 8%. You would say, "Geez, what are you talking about? How could if you just look at this chart, probably like, hey, there's no problem with this market, right?" Light, and some of the other names have been pretty darn good. I'd like to see Sienna get back above that 20-day moving average. I was actually watching this stock today, the other one that had good earnings, which is COHR. That's a nice move into the 20-day moving average. What helps? And I was just listening. Meb Faber, I believe, put together a trend following video. You could check that out. I thought that was pretty good. I watched that last night. And reminder that if you're taking trades like based on something of a support level, like a 20-day moving average, then let it play out. I did this last week with Google. I had Google on my setup list, um, and I put the trade on Friday, but I took it off because I just felt too uneasy about the market, right? I was letting my feelings kind of get involved and say, "Hey, I'm worried about this market. I didn't like how it closed on Friday, so I took the trade off." And remember, if you watch my video on Friday, as as I was talking about Google, there it popped, and that was because Berkshire got involved in it. But hey, it tried to break out. It didn't make it. And again, that's because a lot of times, like uh, a lot of breakouts are not going to work when you're dealing with a more difficult market. But it came in here, it came back in here, and I bought this today on the pullback. Now, I, the goal is like to not let your head interfere with some of the choices that you're going to make. So where would I probably hold this to? Well, it depends on the time frame, right? I initially put, and I'll probably honor that. I put a stop right inside the value area. So I think I put 288 is my stop. So if you want something a little bit more room, what I would do is maybe watch the 20-day moving average. But again, that's more, you have to be okay with that. That's more of a tolerance. And that could really kind of, if you do get stopped out at the 20-day moving average, that's a decent distance away. I mentioned BE earlier. BE, watch this 114 level. That's the top of the value area. Again, look at how well the value areas are telling you stocks are not ready. Right? It tried to do this Friday, 114. Did this on Monday, got up to 114, couldn't do it. Almost got there yesterday. Did it again today at 114. So there's a lot to this, and this is why technicals to me, and having a nice roadmap like this, it tells you where there's buyers and sellers and when stocks are not ready. So if this thing does turn the corner for 114 and gets back above the value area for the month, I'm all about it. Right. And that would be, then you could set your stop just inside. So a couple other stocks that I was watching today. Grail looks pretty good too, right? Also, this is probably not in any of the other like any of the major indices, so that helps, right? Because names that are in the big indices are getting whipped around a lot. When you have higher volatility, right now the VIX is 23 or above 23. If the company that you're trading is in an index, right? There's a lot more index trading that's going on right now that's pushing around the markets. So you may find some stocks and you're like, hey, look at this stock. It really didn't do the same thing as the overall market. Well, because maybe it's not even in any of the indices, and therefore it's not getting pushed around with sell programs and buy programs, which is what we got today, left and right, buy programs and sell programs in the overall market. So some of these stocks that are not in the Qs or SPY could kind of do their own thing a little bit and not get pushed around. But I have to say, I like that. Right, that's not bad. What else was I looking at today? The uranium names. I tend to, at this point, with considering the volatility, I'm looking at CCJ. Would like to see this get back above the 50-day moving average. Oklo had a nice day. I actually like this one too because nobody talks about it. But I like how LEU got back above its 5-day moving average. For a trade, maybe it comes back up to the 50-day moving average or the 20-day moving average. What else do I have on my list? All right. I added TSEM today and JCI. We could review a couple of these. Again, this is my watch list from the weekend, and you could see kind of how I add names to it as we go along. Right, the names that are in gray are from last week. The names that are in white and blue are from this weekend. So, last couple names to go over. But yes, I like this TSEM. If I could get the right screen up here. I would like to see this get back above the 5-day moving average. And this is Tower Semiconductor. Nice move on earnings, settling back in here. Another name that acted well is Frog today. Remember, Frog had this nice move up here, software name, retook its 5-day moving average. Just be mindful of the 1 hour value area. That's right around 60.93. That's where the stock stopped. All right, some other names that are moving after hours. Um, let's look at what IREN is doing. I don't know if this gets me, if I can get involved in this name here. I'll be watching it though. Look at the reversal it had today. So it's going to have some overhead stuff at 50, right around 55.43. What was the other name that I was looking at today? I mentioned JCI. Right, probably a name that is off your radar a little bit, but notice how this has now filled the earnings gap, had strong earnings. Right, so that's what I would, and then for confirmation, waiting to see if this gets above the 5-day moving average would be something to watch. All right, I think that's enough. So ultimately, let me just rehash just for a quick minute. Um, Dips, market dips. We do want market dips, right? They're good places to add risk, right? But we want to be patient, right? And we want to wait for buyers to come back in. I've said it could be when the Fed changes their tune. That definitely could have something to do with it. But it could also just be, Nvidia putting out a really good earnings report and people liking it, and people saying, "Hey, it's more risk on. I'm going to start buying." Right? The institutions have been selling the last couple of weeks, so maybe this entices them to start to get back involved.